Cool. I think everyone's starting to filter in. We'll give everyone another minute or so, and then we will go ahead and get started. A lot of people here so far. We got, about 80 plus attendees. This is a good turnout. It's going to be a really good session. Um, yeah, James, I think we're about ready if you want to kick us off.
Yeah, absolutely, guys. So nice to meet everyone virtually. My name is James. We're going to start with a round of intros just so you know who we are. My name is James. I do US partnerships with accounting firms here at Crypto Tax Calculator. Little background, I am a CPA licensed in the state of California, and I come from PwC. I eventually jumped into individual taxation, specializing in cryptocurrency, and then jumped over to Crypto Tax Calculator after using the software to utilize on my own clients. And just a little background here, CTC is a Sydney-based company.
Yep, appreciate it. Thank you. Hello, everyone. I'm Nick Waytula. I'm the head of tax here at Crypto Tax Calculator. As James mentioned, we are an Australian-based company founded in 2018 by a couple of brothers who had a tax problem themselves with a lot of their on-chain, a lot of their DeFi activity. So from day one, Crypto Tax Calculator was started to help solve the problem of DeFi taxes. And I know that, we are two US citizens here that are talking to you guys about Australian taxes, but, we are a very global company. So a large part of our job is dealing with the Australian market. So again, we're founded based in Australia. We have much of our workforce in Australia. James and I happen to sit in the US, but, we are very well up to date on the Australian tax laws. So feel free to ask any questions that you guys have. A little bit of a background here. So we have some, questions that James and I will talk about, and we'll talk about, different laws in Australia and how different things are taxed. And then we will open it up to the floor for a bit of a Q&A as we get going here. So feel free to pop all of your questions in the chat. James and myself will be monitoring it as we go. And when we get to the Q&A portion of this, we will definitely get to all of your guys' questions. Um, so with that, yeah, James, I'll kick it over to you.
Yeah, absolutely. We'll keep this conversational and informative. So with that being said, Nick, can you tell me a little bit about how crypto is taxed in Australia?
Yep. So that's a great question. So for those that don't know, I think there might be a varying level of, crypto tax knowledge in this room. So um, anytime you dispose of an asset, so if you sell it, if you, trade it, swap it to another crypto, that's going to be a taxable CGT event for you, and you'll have to recognize a gain or loss on that transaction, as well as other types of income. So anytime you receive staking rewards or airdrops or hard forks or things like that, where you get crypto into your wallet, those will be taxed as income. So it could really be broken down into two sections. When you dispose or sell an asset, or when you receive an asset as income. If you're a business getting paid in crypto, that's income to your business, or if you're receiving airdrops or staking rewards, those are also income to you.
Awesome. Like breaking down a little more, can you break down what counts as capital gains versus what counts as income?
Yeah, for sure. So capital gains are more of the things you sell, right? So if I sold Bitcoin for fiat, or if I sold, Ethereum for fiat, maybe that's on a centralized exchange, maybe it's a Bitcoin ATM, whatever it is taxed as a CGT event. So anytime you're getting rid of crypto, whether it's, you're selling it for fiat or you're swapping Bitcoin for Ethereum, that is a taxable CGT event. And then on the income side of things, like I said, anytime you get like an airdrop or a staking reward or a hard fork, or anytime you have, crypto coming into your wallet, kind of out of thin air that has a value to it, a value associated with it, those are usually income items to you. And then I just saw a quick chat pop up, so I'm just going to answer this question because it's right along the line. So, question is, when you transferred from AUD to USD, you won't be taxed on the process. Uh, Sorry, you won't be taxed to buy the crypto. If I'm understanding that correctly, or if you need to clarify, please feel free. But um, anytime you're swapping, right? Anytime you're buying crypto with fiat, that is not a taxable event. So whether it's with USD or with Australian dollars or with, a different currency, swapping from one fiat currency to another is a different question that very well could be taxable or it could not. But I would urge you to kind of look up those laws on your own. But generally, anytime you purchase crypto with fiat, it is not a taxable event. So if you just go to Coinbase and you buy some Bitcoin with Australian dollars, some AUD, then that is not a taxable event in Australia.
Good answer there. Now, on the topic of taxable events, can you tell me, are staking rewards taxed?
Yep, absolutely. So staking rewards are taxed as assessable income, right? Just like your other types of income. So if you're staking Ethereum on Coinbase, for example, you're getting paid out small, amounts of Ethereum for doing so. Those small amounts of Ethereum are taxed as income. Now the question then becomes, and I'll ask it before you can ask it, how much income? Like what income do I recognize from that staking reward? And the answer is the fair market value. So staking is the process of, I'll put this in terms maybe, everyone can understand of locking up assets and earning, call it interest rewards on that. So just like you would hold a share and receive interest rewards or hold, fiat in your bank account and receive interest off of that, it's the same thing with crypto. So if you hold Ethereum or another asset on Coinbase and you earn staking rewards, you can kind of associate that with like an interest type of reward or a dividend or something like that. So I won't get into too much about what staking is. It's a very complicated process, and there's a lot of crypto nomenclature behind it. But anytime you receive a staking reward, let's say you receive one Ethereum from Coinbase because you're holding Ethereum on Coinbase and you're staking it. That one Ethereum is taxed at income. What is the income? It's whatever the fair market value is of that asset. So if Ethereum was worth 5,000 AUD at the time you received it, you recognize 5,000 AUD on your tax return.
Awesome. Awesome. Now, Nick, say I have a client and obviously they hold crypto, but they have yet to cash out. Are they liable for any tax?
It's a great question. So I'll hit you with the attorney answer, right? It depends. So sometimes people think, oh, I'm holding crypto on my Coinbase account and I've never cashed out to fiat, so I don't have to pay any taxes. That could be true, but it also could very much not be true. So it's true if you never sold, swapped, or did anything with your crypto. If you're just, buying Bitcoin just to hold it and you've never sold it, you've never swapped it for another crypto, it's not a taxable event. It is, however, a taxable event when you swap it to another crypto. So, for example, I have Bitcoin in my Coinbase account or in my SwiftX account or whatever it is, and then I swap that to another coin. Maybe it's Litecoin or Ethereum or any other crypto. That swap from one asset to another is actually a taxable event. So even if you don't cash out to fiat, you still may be recognizing taxable events that need to be reported on your tax return.
Awesome. Now, I want to get into kind of the spine of crypto tax, which is cost basis. So, first question I have is, can you provide an example of, say, a client buys crypto, Bitcoin, on Coinbase, and they transfer it to a different platform like MetaMask? Can you kind of walk us through on how that cost basis is established, maintained, and realized?
Yeah, absolutely. So I'll break that question up into two parts here. So one, when you buy Bitcoin, for example, or any crypto asset, your cost basis is essentially what you paid for it and includes the fees. So let's say you bought one Bitcoin for 100,000 AUD and you paid a $10 fee to do that through your exchange. The cost basis of that one Bitcoin is $110. Or if you didn't pay a fee, your cost basis is 100,000, and that will be used when you sell it to determine your gain or loss. So for example, I bought it for 100,000 and I sold it for 110,000. Your cost basis was 100,000 and your proceeds or what you got from the sale is 110,000. You net those out, so 110,000 minus 100,000, and it gets you to your recognizable gain, which is $10,000. Now, that doesn't mean you have to pay $10,000 worth of taxes. You pay however much tax, that you are required to pay for your tax return. One of the benefits, and we'll get into this a little bit later, of being an Australian resident, an Australian taxpayer, is that you get to take advantage of the 50% CGT discount. So, you had a gain of $10,000, automatically you cut that in half and you pay tax on a $5,000 gain. And again, we'll get into that a little bit later. Now, that scenario where you transfer it, let's say you purchase Bitcoin on Coinbase and you transfer it to SwiftX or to MetaMask or to any other account. If you sell it in that other account, so I'm just going to use SwiftX, for example. So if you buy one Bitcoin in Coinbase and then transfer it to SwiftX and then sell it in SwiftX, SwiftX will not know what you purchased it for. So when you go to do your taxes, SwiftX might give you a capital gain report that says, hey, you sold this asset for 110,000 AUD, but we don't know what you purchased it for. So we think you have a gain of 110,000. Now, most people aren't happy with that because, hey, I just paid for this. Why am I, recognizing a gain of 110,000? And that's because your cost basis was established on Coinbase. So you need to use the Coinbase information to fill in the gaps of that SwiftX sale, if that makes sense. So whatever you purchased it for, that 100,000, you want to use that on your tax return to tell the ATO, like, hey, I purchased this for 100,000 and I sold it for 110,000. I only have a gain of 10,000, not the 110,000 like it looks. Best way to do that is to use a platform like Crypto Tax Calculator. We take all of your data, so you upload your Coinbase account and your SwiftX account, and we can see what you purchased it for and what you sold it for across all of your different accounts and all of your different platforms. So instead of thinking, oh, I had $110,000 gain because I don't know what the cost basis was, Crypto Tax Calculator can see that, recognize that, and give you accurate reports which show your cost basis, your proceeds, and ultimately an accurate gain or loss number.
Nick, why would an exchange not know the cost basis if you're holding the crypto in that exchange or wallet?
Yeah, that's a great question. So, like I just mentioned, when it's purchased elsewhere, the exchanges don't talk to each other. Coinbase isn't telling SwiftX, hey, we have Nick Waytula, an Australian taxpayer who just purchased this Bitcoin for 100,000 and then sent it to your platform. In an ideal world, all the exchanges are talking and everyone knows what's going on in other exchanges. But in reality, each exchange is in a black box, so to speak. So Coinbase has no idea what you're doing in your MetaMask account or your SwiftX or your independent reserve account. And likewise, independent reserve has no idea what you're doing in your Coinbase account. So if you purchase something on one platform and transfer it to another, those exchanges are not talking to each other. So it's very important to use a tool like Crypto Tax Calculator to get all of your data in one place, to aggregate all of your accounts, all of your information to generate that accurate report. Um, if you think about it, Coinbase, if they're in a black box and they have no, idea what's going on with the rest of your activity, Crypto Tax Calculator is that giant, friendly play pit of all of your different exchanges. You can put everything into it. You get all of the data for everything going back to your first transaction all the way to your most recent over every exchange and every wallet. And then it's really easy to calculate your gain or loss based on that information because we have, where you purchased it for. If you purchased Coinbase 10 years ago, or purchased Bitcoin on Coinbase 10 years ago, Crypto Tax Calculator can get that information going way back when and generate accurate reports for, the here and now.
Awesome. Now, from what I saw with my clients at my old job, is some people hold their crypto on the actual exchange, so within the Coinbase app. Others hold it on a wallet, whether it be a hot wallet or a cold wallet. Do the clients only need to report on the exchange data, or do those wallets come into account too?
It's a great question, and one of the biggest misconceptions in the entire crypto space. So yes, you have to report everything, not just your centralized exchanges, not just Coinbase and independent reserve, but everything in your MetaMask wallet and your Phantom wallet, everything as a whole. So it's not just your off-chain data on, Coinbase, it's your on-chain data, any DeFi activity. If you have NFTs you're buying and selling, all of that needs to be reported. Any time you sell crypto, whether it's in Coinbase or MetaMask or wherever, that's a taxable event, right? A CGT event, and that needs to be reported. I see a couple questions in the chat, so I'm just going to answer these real quick. Can the script for script rollover relief be used? Ryan, I'm not 100% sure on that, so I won't dig into it, but I think so. If the cost didn't come across in crypto tax, is there any customer service? Yeah, so if you're using crypto tax calculator and for whatever reason we didn't get the data or the cost basis or something like that, we have a 24/7 support team that you can reach out to. There's a little button on the bottom right, click on it, ask us any of your questions, and our support team are more than willing to help out. How do we determine the cost basis if the crypto is mined? Melissa, that's a great question. So we scrape the blockchain for the information. So we can see that it hit your wallet, after you mined it, let's say on October the 1st at 10:51 p.m. So what we can do is now we see, okay, you have one Bitcoin that hit your wallet at this time. We go in and look at the pricing information for that asset at that time. And that's how we use to establish the cost basis. And in your case, if you're mining, that's also income to you. And the value at which you recognize that income is the fair market value. And CTC does all that on the back end. So you don't have to look up any pricing information or nothing. CTC uses very reputable sources to get this pricing history and all this pricing information so that once you upload all of your data to Crypto Tax Calculator, we do all that for you and we aggregate all that information for your account and for all of your crypto. When we sign up to Crypto Tax, it's an automatic process that the platform can pick up the historical cost without connecting Coinbase. So if you don't connect your Coinbase or your other account, then CTC cannot get that information or any of the cost basis for it. So we have multiple different ways to upload your data. So let's say you used to use Coinbase in 2020, but no longer do. If you have CSV of your data, we can upload, the CSV and get all your transactions that way. But, we can't assume anything on our end. So if you don't give us the data, if we can't pull it from the blockchain, then unfortunately we can't just make up a cost basis. CTC has a lot of clever features. You could manually add transactions one at a time. So if you only bought Bitcoin on Coinbase in 2021, you can manually add that transaction if you have the information, or you can upload a custom CSV and get all of your transactions into CTC that way. But essentially, you want to populate Crypto Tax Calculator with as much information as possible. If you're missing any information, that information could house critical tax information like your cost basis or proceeds or capital gain transaction events. And you don't want that to happen. So you really want to try to get all of your data in CTC to generate the most accurate report.
Now, speaking of that, speaking from experience here, some of these crypto traders have up to 100 wallets and exchanges. We rely on the customer to report that. Is there any tool within the app that could help if they have missing data?
Yeah, great question. So we can recognize transfers on the back end in the app. So let's say you upload a Coinbase account and we see that you have transfers to Independent Reserve or to your MetaMask wallet or something like that. CTC can recommend, hey, we see that you have these transfers. Do you want to add this account? Do you want to add all the data? So we have some, tools on the back end and within CTC that allows you to get your account to what we like to call a complete state. So a complete state means you have all of your data and all of your sources, all of your platforms. If you have 140 different MetaMask wallets, that's fine. Enter 140 different MetaMask wallets in CTC. We can handle it. We can handle up to, a couple million transactions, I believe. So, the transaction volume or how many wallets you have shouldn't hinder your ability to generate an accurate report. And we help you, if you forgot a wallet, we could recommend that you add that so that, again, you bring your account to a complete state.
Good to know. Now, speaking of those filing reports, what does the government expect to see? What is the client supposed to download? What are they supposed to report?
Yeah, so CTC generates a bunch of different reports. So um, most important really is a MyGov like tax report that you can use on your tax return, upload to your tax return. We also have different reports like a capital gain report. What that does is show you all of your CGT events within your crypto transactions. So if you bought something for 100,000, sold it for 120,000, and had a $20,000 gain, all of that information will show up in the capital gain report. But that you don't just stop there, right? We were talking about mining rewards and staking rewards and airdrops and things like that. That's all income to you. So that also needs to be reported on your tax return. And for that, we have different reports. So we have an income report that shows you everything you got and the value of it so that you can use to file your taxes with the correct information. CTC also supports many other different reports. So one of our more common ones is an audit transaction report. So that, worst case scenario, if the ATO ever came knocking on your door asking for more information about your tax return, you can show them that audit transaction report, which says like, here's everything I've done in the software. So they know you weren't, manually editing data and like, you know, essentially committing fraud in the data and just making numbers up. Uh, we have different start of the year holding reports so you can see the value of your crypto at a certain point in time. So we have tons of different reports that really help you not only file your taxes with the ATO or file your client's taxes with the ATO, but also to give you more insight into your information, your holding periods, your cost basis, things like that.
Awesome. I see a few more questions in the chat if you want to get to those.
Sure. How is it determined when the coins were purchased if I say I might be buying daily? Yeah, so we get the data up until the exact second. So if you have, one purchase right now, and then in 5 seconds you have another purchase, we scrape the blockchain for that data. Or if you're using an exchange, the exchange sends us all of that data. So one of the good things about the blockchain and the crypto industry is that everything is transparent. You can't hide data. So if you have transactions every 5 seconds, the blockchain will show us that you have transactions every 5 seconds, and CTC can scrape the data from the blockchain to pull into your account to populate for your taxes. And then, like I said, if you have an exchange, if you're buying 25 different lots of Bitcoin every single day, Coinbase or Independent Reserve or whatever, they have a record of every single one of those purchases and they send that off to us and we can see exactly, what you did at what time and gather all of your data. So it's very frequent that people come to Crypto Tax Calculator who are doing bot trading and have thousands and thousands of transactions a day. That's no problem for us. We can see based on the blockchain, timestamps, things like that. We can get every single transaction. Next question in the chat, how do we get the data into CTC, sync with exchanges, manual upload? So yeah, all of the above. So the easiest way to do it is to connect to your exchange via either an OAuth connection. So for example, Coinbase and some other exchanges, we accept an OAuth. So you log in with your Coinbase username and password, and we get all of the data through an API with Coinbase. Excuse me, it's a very secure platform, so you never have to worry about anything being leaked or any personal information being out there. Excuse me. As well. So if you can upload that way, you can connect to your exchanges with an API. Again, we ask for a read-only API, so we can't access your funds or anything like that. You can upload a CSV. So if you have a Coinbase CSV of all of your transactions, you can upload that way. And then we have some more manual processes. So we have a manual CSV. So if you have, for example, FTX, right? You had a bunch of data on FTX and it got shut down. If you want to upload that data, maybe you don't have the raw data from FTX, you can upload a custom CSV, and we help you with that as well. So again, we have a support bot and not a support bot. We have a support team and a button you can click that'll help you through all of these steps. So if you need a custom CSV, we can help you with that. And then you could also add transactions one at a time manually if that's what you choose to do. So many different ways to get your data into CTC. But the most important thing is that you get it in there one way or another. We don't care if you're manually uploading it, doing bulk CSV uploads or what. The important thing is to get all of your data in there. What method does it calculate the gains? First in, first out. So FIFO, right? It's your decision. Or your client's decision. So we offer multiple different methods. So FIFO is one of them. FIFO is also the most common that people are using. HIFO, highest in, first out is another one. LIFO, last in, first out. There's average cost methods. There's tons of different methods to calculate your gains. So if you go into our tax settings, you can see all of that information and choose whatever is best for you. We'll go one more. Can you confirm if moving your crypto assets from one platform, the one where you purchased, to another is a capital gains event? No. So when you transfer it from one exchange to another or from one of your accounts to another, doesn't matter if it's an exchange, a wallet, or what. If you own that account, if you hold that wallet, if that's yours and you transfer it, it is not a taxable event. So you don't have to pay CGT on transferring from Coinbase to Independent Reserve, for example. However, oftentimes to transfer, you have to pay a fee or a gas fee or something like that. Those fees are taxable events. So let's say you transfer one Ethereum from your MetaMask account to your Phantom wallet. Maybe you have to pay 0.01 ETH as a gas fee to make that transfer. That 0.01 ETH is a disposal, right? A sale of your asset, and that's a CGT event right there. So while the transfer of the assets from one account to another is not taxable, any fees associated with that are taxable because that's leaving your wallet. It's a disposition of your assets. Okay, Craig, I'll read your question here. Give me 1 second. Yeah, so if you have a client who is creating crypto, right, or mining crypto or receiving staking rewards or anything like that, that is an income event. So if you're receiving staking rewards, things like that, you have to pay taxes on that income. However, you don't have to pay taxes on unrealized gains. So let's say you're lucky enough to get into Bitcoin at $1,000 way back when. If you haven't touched it, if you haven't sold it, if you haven't done anything with it, and the current price of Bitcoin is what, maybe 120,000, 140,000, something like that, you don't have to pay taxes on that increase of 139,000 just for holding it. So you only pay taxes on realized gains. Anything unrealized, if you're just holding crypto and it goes up in value, you don't have to pay taxes on that in Australia.
Awesome. Now, my brain hurts from hearing a lot of this. It gets very complicated. So, I, as a CPA, get confused by some of this. Does the ATO really have complete visibility? If I have 200 wallets, I'm on chain, I'm off chain, I have cold wallets, can they really track it all?
So I'm going to give the answer that people probably don't want to hear, and the answer is yes. The ATO can track it. It's very unfortunate, but they can. So the way they do that, is with like blockchain analytic tools, TRM labs, Chainalysis, crypto tax calculator, a lot of these tools out there, the ATO can use and look into your stuff. So I will say crypto tax calculator does not report anything to the ATO. So if you're concerned about that, rest assured that that CTC will not report anything to the ATO. We don't even ask for personal information. We don't ask for your name. All we ask for is an email address and a password to sign up. And then you enter all of your public, data anyways, your public wallet addresses, things like that. We don't ask for any private keys. And again, we do not report to the ATO. However, if the ATO wanted to look into your crypto activity, they can. Again, crypto is transparent. The blockchain is transparent. Just because you're using Ethereum and MetaMask and oh, no one can find out who I am, that's not true. You had to have on-ramped or off-ramped at some point, and the ATO can track that. So I'll show you kind of just real quickly how it happens. Let's say you're on Coinbase and you transfer to MetaMask and you do everything on MetaMask and you don't even use your Coinbase account other than that initial on-ramp. Well, if the ATO thinks that, hey, this John Doe or this random person we need to look into, maybe their tax return doesn't add up and they think it's suspicious, they can give a summons to Coinbase and a request or an RFI, a request for information, things like that, where Coinbase has to legally give up, that data that they hold on you. Because right, everyone is KYC'd into exchanges these days. There's really no hiding from the exchanges. So that's where they start. So the ATO will get your Coinbase data, and from there, the blockchain is extremely transparent. They can track it all the way through all of your different wallets, see where you're transferring it and what you're doing. So it is very important to know that the ATO can and they will look into your activity. There's no hiding. And that's what crypto tax calculator helps you do, right? We don't want to hide from the ATO anyways, right? No one wants to have someone knocking on their door, coming and auditing you and assessing penalties and fines and possibly jail time. Who knows? So crypto tax calculator helps you stay compliant so that you don't even have to worry about that. You come in, upload all your data, get all of your tax reports, file your tax return, and then you can rest easy at night. Um, Another question, does our customer service team have like phone or Zoom support? Yes and no. So chatbot is always, or chat is usually the first thing, first line of defense. And then if there's specific scenarios or we have to take a look at your account, yes, our customer support team will help you. They'll jump on a call with you and kind of take a look at your account. But I will say chat and back and forth communication is usually the number one go-to. And then if we do need to do that Zoom call, we have that available. Are you allowed to change the CGT calculation methods every year, or is it locked in once selected? If allowed to switch, will CTC adjust the cost basis on the back end accordingly? Great question. So your taxes are your own. You can pretty much do what you want. So yes, CTC allows that to happen. Should you do it? I wouldn't personally recommend it. However, this session is not about financial or tax advice. So at the end of the day, you can do what you want to do. But I personally like to keep, FIFO or HIFO, or for all of my transactions for every year. It allows consistency to happen, and that, in the worst case scenario, if you ever get audited or if, the ATO is looking into your activity, you can say, hey, I maintained that consistency. I tried to do my best. I did everything I should. I used crypto tax calculator. I uploaded all my data and got the accurate reports. So consistency is always the safest method to file your taxes. That being said, yes, in 2024, you can use FIFO, and then in 2025, you could use HIFO if you prefer. And we will automatically adjust the cost basis on the back end. So we would recommend that you lock your period. So if you use FIFO for 2024, you can go in and lock all of that data so that we aren't recalculating anything in 2024. We're not adjusting any tax reports, so that once you're filed, you're locked in, everything's good to go. So you lock it in, and then in 2025, you can switch to a HIFO or something like that, and CTC will run all of those HIFO calculations on the back end for the 2025 tax year. And I know we only have about 7 minutes left. So if you guys have any questions, please put them in the chat. These are great questions so far. And it's been really great. Is there a way to minimize CGT rather than FIFO? So there's a spec ID method that you could use that requires very, very intimate tracking of your data. I wouldn't recommend it. So you have to say like, okay, this asset that I'm about to sell has this cost basis, and it's very difficult to track. And it really just depends on your personal situation. So sometimes FIFO is more beneficial if you have, longer holding periods, for example, like in the US. Sometimes HIFO is more beneficial for taxes. I would say a lot of the time HIFO is best because you're getting rid of your highest tax lots first. So if you bought something for 50,000 and then bought it for 100,000 and then sold it for 110,000, if you're using HIFO, we'll take that $100,000 cost basis for that sale, and it'll look to minimize your gain a little bit versus if you use that $50,000 cost basis for that sale. So no one right answer here. Everyone's scenarios are different, but typically in my experience, HIFO has been tax friendly, I should say.
Awesome. Now, I want to ask an important question here because I'm sure it'll come across a lot of people. Say I have a client that got scammed or lost access to their crypto. How can I handle it?
Yeah, that's one of those one-off scenarios where it just depends. It depends how the scam happened, depends how you lost your crypto. So typically, these are not deductible and you can't take any, tax benefits from it. But there are very, very specific instances, and I would recommend reaching out to a tax CPA or a crypto CPA or another person that's familiar with those to determine your specific situation or to help you with your client's specific situation. But just for example here, let's say someone sent you a bad link and you clicked on the link and it stole all of your funds. The funds it steals doesn't, those don't necessarily arise to the level of stolen crypto. A lot of the times the ATO or the government will look at that and be like, well, you shouldn't have clicked on the link. So unfortunately, you have to pay the taxes on it. So lost and stolen is a tough one. Generally, you don't get the tax deductions for it, but there are very specific scenarios where if you think it applies to you, I would highly recommend reaching out to a crypto specific CPA. Um, CTC has a network of them, not only in Australia, but all over the world. So if you guys need a recommendation or if you want to be, one of our crypto preferred partners, reach out to us and we're happy to help.
Awesome. And then finally, what happens if I were to receive crypto as like a payment for goods or services or even my job?
Um, yeah, so if you are receiving crypto from your job, from your employer, that is income to you. So that's a great question. There are many, many platforms out there that allow you to be paid in crypto through your job. So I won't name any names, but there are many players in the space, some of which CTC is partnered with and have relations with. So let's say I work for a coffee stand and I take payment in Bitcoin. Whatever, anytime I'm paid in Bitcoin, I have to recognize that as income on my tax return. So just like mining rewards or staking rewards, you take the fair market value at the time it hits your wallet, and then you recognize that as income on your taxes. Couple more questions. Sometimes clients are unaware or have no clue regarding the details of a scam. Happens all the time, very common. And it's always in the history. Is there a charge to reach out? If you're talking about reaching out to CTC, no, we don't charge you to reach out. Feel free to contact myself or James or use our CTC support team. We're very reachable, not only on social media, but through our website, through our support team. So reach out to us and, we can help you with that situation. We can take a look. And while we don't give tax advice at CTC, we can connect you with someone who can take a look at the scenario for you. And we're always willing to take new accounting partners, new CPAs, new accountants. So if you guys want to, be part of our network, definitely reach out, and we can, help you out with that.
Very cool.
Awesome. Well, we'll take maybe one or two more and then call it a day.
Okay. Something that, again, something I saw a lot is an airdrop that comes into either my wallet or an exchange. Can you educate me on what an airdrop is and how do I treat that tax-wise?
Yeah, airdrops are pretty simple. It's income to you. So just like staking rewards, if the airdrop hits your wallet on January 5th, 2024 at a certain time, you recognize the fair market value of that asset at the time for your income. Airdrops are a little bit difficult to wrap your head around, but think of it as um, someone walking on the street and handing you a $500, $500 or $100 bill or something like that. It's call it free money that hits your wallet that you didn't have to do anything for. So a lot of times these are promotional events or rewards for being on a blockchain for so long or for holding an NFT or things like that. So a very famous one was the ape coin. So for holding a bored ape, I think a couple years ago, that company dropped everyone ape coin. So ape coin has a value in the market. You can go trade it right now. So, whatever the fair market value that hit your wallet at that time, that's what you recognize as income. And again, a lot of promotional type of activities revolve around airdrops and yeah.
Can I decline them?
It's a great question. Unfortunately, you cannot decline airdrops. If anyone has your public wallet address, and again, it's public, so you can't hide from it, they can send you something. They can send you crypto. They can send you an airdrop. If you do not want to claim that airdrop as income on your tax return, again, I would highly recommend reaching out to a crypto savvy accountant that can help you manage your position. But it's pretty clear that when you receive an airdrop, you have to pay income on it. And then we have one more in the chat, so we could take this as the last one. But if anyone has any last minute questions, feel free to reach out to myself on X or reach out to us on LinkedIn, reach out to CTC, and we can help answer any questions that you have. So if I'm paying in crypto, you should classify it needs to be recorded as income in your business. So yes, so these are two different events. So if you your business is paid in crypto, you recognize income from there. That's one event. Then if you're using that crypto to buy things, computers, whatever it is, you can write that off as an expense. So those are two separate events that both need to be recognized and both need to be on your tax return. So you can't just say, oh, I, was paid in crypto, but then I used that to buy something, an expense, and not report that income. It all needs to be reported. Um, I've used CTC before. Most of the time, it doesn't allocate the swaps and trades correctly. Is that normal? I would say that's very abnormal. 99.9% of the time, CTC can accurately get your trades and your swaps and things like that. There are certain times where it's difficult for us if it's a brand new coin or a very obscure coin that's not traded very much and you're swapping it, or sometimes very complex NFTs, Uni V3 position, those sorts of things are a little bit difficult on the back end to calculate. So while it's not common at all, it does happen every once in a while. And that's why CTC has a review tab. So you can go in, you can see all of these, and you can, provide us the additional information that we need to give you accurate reports. And that was from an Excel upload. It's better to use API. It's always best to use API. API is the most, accurate information. It's the best data. Sometimes in Excels or CSV files, those things, might be missing information, or if you accidentally, deleted a cell or deleted important information, and we still accept that upload, it can, misconstrue your taxable information.
Yes, and another benefit to using that API is it's going to be constantly self-sustaining. So it's going to update itself. So you don't need to keep re-uploading that CSV. So it's just live data.
Exactly. Yep. CSVs, Excel files, those are all static information. So if your last trade was January 1st, 2024, we don't get anything, new until you upload a new CSV. Whereas if you connect an API, the second you make a new trade, we, because we have the API, we get all of that information. So, we can see all of that in real time versus the static CSV data. It's a good point, James. Thank you. Awesome. Yeah, if there are no other questions, I think we'll wrap it up here. I'm not sure if this the recording will be distributed, but I know it is being recorded, so feel free to reach out if you want access to it. But yeah, just want to thank everyone. Thank you guys for hosting us and thank you for putting it on. We really appreciate it. And as we've said, we're very reachable online. If you need us, we're there. Crypto Tax Calculator. You can Google us. You can find us on X or LinkedIn, TikTok, even if you want to go that route. But yeah, really appreciate you all joining. And I love when people are learning crypto taxes. It makes me happy that people want to, jump down this route and get into this industry.
Yep. Likewise, guys. I appreciate all your time and thank you for hosting. Thanks for attending.
Yep. And James, thank you for asking the question. Really appreciate it.
Of course.
Take care, everyone.
Thank you, Nick and James.